Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Tim Trombetta, Director of Corporate Solutions and Advisory at Nasdaq for our National Biotechnology Month coverage. Tim, it's great to have you with us. Welcome to Trade Talks.
Thanks, Jill. Nice to see you again.
All right. And Tim, how have things changed over the past 10 to 15 years with respect to investor engagement from the corporate perspective as it relates to biotech and healthcare companies?
Yeah, I would point to the contraction of the sell side, something that's been going on for probably more like 20 to 25 years. But the impact for our issues has really been on the buy side. So where there's less people covering more stocks, it's been a challenge for our issuers to know who to speak with. And just by that definition alone of less people covering more stocks, it sort of pushed things into sort of a generalist community. So kind of hard to know, buy side being completely inundated and not really knowing sort of what's in their portfolio.
So in what ways, how has your team adapted to these changes to better serve biotech issuers?
Yeah, it's a great question. NASDAQ has changed. Just a little history. I was in NASDAQ IR 15 years ago and things were done very differently. The approach then, and probably done from maybe competitors and probably the sell side, is really doing a peer-based analysis. So who owns your peers, doesn't own you, and that's sort of the legacy approach to targeting. NASDAQ about 8 years ago started to leverage data. Not surprising, as a lot of companies like Amazon do this, but what we were able to do was leverage buy-side behavior and look at that change over time. And I always think of it a lot like Amazon, where Amazon knows their customers, they understand what they purchase, put in their basket, and they look at their history, they're profiling their customer base. We are simply profiling the buy side and be able to give that data to our clients in real time. So I use it as sort of sentiment analysis to understand whether Bob Smith, who's a PM and works for XYZ Capital, is he meeting more with small cap oncology today, or is he meeting less with small cap oncology? And what was he focused on 1 month, 2 months, 6 months ago? And being able to get that to clients in real time, that has been a game changer for us.
Yeah, from the buy-side perspective, that's incredible value that certainly was not available even less than a decade ago, as you had mentioned. How has your role changed in the past few years as the industry evolves with COVID? Are these temporary changes or something that will permanently change how the industry approaches advisory solutions?
Yeah, I think, me specifically, I changed my role in the sense I've recently, we sort of launched a healthcare team, right? We never really had a dedicated investor engagement team around healthcare. We did it last year. We brought in a couple of folks that really are the glue and support of the team, and they come from healthcare. They come from biotech. We thought that was really critical, less market and more about being in biotech. It's really the bread and butter or the growth engine of NASDAQ, in my opinion, in advisory. But, to your direct question on, COVID and how things have changed, I do think the hybrid approach is here to stay. I mean, we know that a lot of people don't want to go back to work for the reasons of they've tasted a different life. I would say if you surveyed the buy side, which we have, a lot of the analysts are fine to go in person. They're making their mark in the world. But the PMs, I think over time we're going to see that some are going to gravitate back to sort of an in-person. But we do think that hybrid is here to stay. It's super efficient. And as we all know, doing Zoom calls, we're supposedly have a lot more time. Joking with that, of course, but I mean that's kind of the feeling from the issuer side, is that they're doing more and more meetings. I don't know if that's good or not. My job, of course, the team's job, is to really balance out their day, right? To be efficient, look at their program and say, should you really be doing 100% increase in buy side meetings this year versus last year? I think the answer is probably ultimately no. Let's be more efficient with your time. Let's recalibrate some of your meetings and kind of focus on what we think is probably more meaningful meetings.
Yeah, also better for the environment as well. You saw those pollution maps when we started to learn to work the hybrid way. So that's another factor as well. Tim, what percentage does healthcare make up on total advisory?
Yeah, I would say if you think about the big funnel, so if you think about, probably listings and start to move into the IR Insight platform and then down into advisory, it's roughly around 30%. And that's quite incredible. If you go back 15, 20 years ago where NASDAQ was predominantly thought of as tech, I think that's definitely changed over time. And that's a great thing for us. I think what's really powerful in my team is when we think about that IR Insight platform being the biggest IR platform on the planet, most utilized platform, the ingestion of data in that tool is a game changer. We have critical mass. And if you take that number of clients that are probably using that tool in the buy side community. I'm sorry, the corporate issuer side. When we think about biotech, it's roughly that same 30% number, but it's probably 1,500 biotech clients that are ingesting data. So that is critical mass, in my opinion. And as I said to you earlier on an earlier question, leveraging that data is really significant for clients.
And finally, Tim, to wrap up here, with the new year here, what are your goals for 2022?
Yeah, it's another doozy for us and the team. We were able to, Jill, last year complete a study that I've wanted to do for over 10 years. That study was on transitional data from phase 3 to NDA commercialization, and what we wanted to complete and what we will complete. So that was completed last year. We will complete phase 1, phase 2, and phase 3 within the next 3 to 6 months, and then we'll even look at follow-on financing studies. That's behavior of investors around that transitional data. I don't think of that as a screen in the sense of, do we meet with this investor or not? I think it's a final additive piece that we add on there to say investor A behaves this way around that transitional data set. So they're still inclusive in the data. We just might deprioritize them, or we might increase their priority based upon the outcomes of what we've seen historically based upon that data set. So really exciting. We have a lot more to come from the team. We're just super excited.
All right, Tim, congrats on all the great work your team is doing. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.